Hi everyone, welcome back to the channel. Now in this month's analysis I'm going to walk through another really high level broader market overview. I'll be covering all of the major indexes and asset classes, and as always I have around 20 individual stock trade ideas for your watch lists going into November. Now it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. Now for those of you that are new and maybe just stumbled onto the channel, hopefully the Scottish accent isn't too difficult to understand. If you picked up last month's analysis, hopefully my work helped you to stay in the market. And of course, I know a lot of the ideas worked out incredibly well. If you follow me on Twitter, hopefully my daily posts have also helped you in some way. I'm told I've got pretty much everything spot on over the last few months. Now, going into the US elections, I'm going to be covering the market warning levels as well for you. And of course, as always, some of my favourite current charts. Now, over the last couple of months, the best players have been continuing to score the most points again, with mega cap tech now pushing up against key levels. So I'll be going through those charts and asking the question, can these keep grinding higher? But before I get into all of that, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted relevant disclosures and recommendations on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a massive advocate of systematic process. Most of you already know that I do not use any magical Harry hindsight indicators. I timestamp absolutely everything, which is hugely important. I'm one of the very few who go on the record with their work. My work is pretty much for everyone. I think if you are an investor, a trader, if you trade options, if you're a financial advisor or a money manager, you'll probably find some value from this analysis. But my work is not geared towards buy and hold forever, unfortunately. I'm looking for structural trends that will last weeks to months, primarily trend following principles, elements of swing style trading, and I like to use logical targets and significant price levels. If we sat down and had a beer, I'd tell you that I'm more of a technical investor these days, but my work does apply to most styles. I've got clients at most of the major banks, and I think if you value charting, then hopefully you find a lot of value from this. But please pause the video. Very important disclaimer. And also, please, as always, smash the like button. It really does help with the YouTube algorithm, and it really does help to get my work a lot more noticed as well. But I think where I really probably want to start this month is just with seasonality. Now, a couple of things. Number one, I'm recording this halfway through Friday's session on the 1st of November, so I don't really know how the market is going to close today. Obviously we have US elections kicking into gear next week. That is the big risk management event on the horizon. I think we all get it. What's the outcome going to be? How's the market going to react, etc. I think Stan Druckenmiller has probably laid it out better than anyone. I think he's gone on the record and said that the market is starting, or has priced in, a Trump victory. I think you just need to have a look at the riskiest assets, crypto, etc., and how those have exploded over the last 6 weeks, etc. So I'm not going to argue with Stan Druckenmiller. He's obviously sees it much better than anyone else. But seasonality, we are in a strong period for the market, typically November to January. The seasonality structure is in place, and hopefully this is a strong year end. I think we would all like that very much. But I also understand the other side of things. I know the economic indicators, I know that the yield curve has uninverted, etc. It's a recession on the horizon, blah blah blah. I do understand all that, but we're not currently seeing signs of that coming into the stock market yet. I think it's something that we can anticipate a little bit further down the line. But what I want to just kind of walk through quickly is the broader market. I've got maybe 6 or 7 charts here prepped, and then I'll get into the individual stocks. But at the beginning of the year, I presented this chart and had the thesis that I thought the market had 50% upside. Now, of course, I did not expect this to kind of kick in and be super close to target within a year. But here we are. There is still, for me, another 15% upside in the market. I like to use Fibonacci levels. I think for the S&P 500, the longer term chart shows us that these Fibonacci levels have a lot of merit. But I think the question I get asked a lot is, well, Sam, that's all great. You've got all these big upside targets, but how can you predict corrections and crashes? And the answer that I always have is that you cannot predict them, but what you can use are risk management levels to just say, do you know what, let's just stand back and let's observe a little bit and see how things play out. And one of the charts and one of the indicators is the very basic 10-month moving average that you can use. It will help you sidestep a lot of the market damage and the carnage. I think the chart shows it really, really well. So if the market does collapse, then you're going to have little technical tools that can help you to sidestep the majority of the carnage. But I am still currently working with upside targets, still 15%. Obviously, aside from US elections, if the market crashes over the next 10 days, I'm fully prepared for it as well. But at the moment, I'm not overthinking things. And for me, I still am looking for bullish opportunity. The VIX is a little bit elevated at the moment. I think that's something that's catching a lot of folks off guard at the moment. If you look at the market, over the last week, for example, it's just been incredibly choppy, incredibly volatile. You're having earnings. Stocks are being hammered a lot more than what they typically tend to be. I think that's just a function of the environment that we're currently in going into the US elections. There's a lot of very nervous money managers. I speak to them every day. And for me, whilst the VIX is elevated, it's a really basic chart that I have here. We've got the buy stock zone, we've got the bat single zone, the hell no, and then of course buy capitulation, which was, if you don't follow my work that closely, I made a really massive real-time call on the VIX back in August to buy capitulation, and of course hopefully that's helped many of you out that follow me on Twitter, etc. But for me, it's just that we're elevated in the VIX, and I don't really have any massive conviction in individual stocks whilst the VIX is elevated. But there are a lot of really constructive looking charts, a really solid technical setups that are taking place. The message that I've had to our clients over the last couple of weeks is, provided that we are above 560 in the S&P 500, then I think we're okay. The slight headache that I have is the deterioration of breadth. The new 6-month highs list has not been expanding along with the advances that we've been seeing in price, so that is a headache. But as most of you know, I use breadth data, etc. very, very sparingly. I like to make fun of the breadth gurus all over Twitter and X, the CMTs, etc. There's just too much emphasis, I think, because what you tend to find happens is when the market starts to rally, you then get that breadth expansion. So I'm not overthinking it too much, but it is a chart that just says, do you know what, if we break below 560, maybe the breadth isn't supportive of buying the dip at the moment. So that's something that I'll be watching with a lot of interest. The triple Qs are pushing up against logical upside targets. Again, if you follow me on Twitter, you'll know that this is my chart that I've been working with over the last few months since the market bottom, and yeah, we're pushing up against this 500, 504 level. So I'm sure we've all noticed the earnings reactions to the likes of Apple, Microsoft, etc. this week. I think it's just a function of triple Qs and XLK literally meeting upside targets, and now a lot of those gains are now being digested a little bit by the market. The Dow today looks like it's catching a little bit of a rebound, so I'm quite comfortable and quite happy with that. So I don't really have any major concerns at the moment with the Dow. The Russell 3000, as you would expect, is mirroring the S&P 500 and the NYSE composite. So again, provided that we're above these key levels, then I think we're okay. Again, some of you will recognise this chart. A few months ago, I posted it to Twitter, just saying that we've pulled back to a logical support level, and you might want to consider buying the dip. And again, that's played out perfectly. So again, I'm just working with key levels at the moment. I'm not overthinking it too much. The Russell 2000, I think a lot of folks have been paying a lot of attention to Tom Lee and Tom Lee's small caps summer, which didn't really materialise. The small caps have just been continuing to grind sideways. There's been rallies here and there, but what you're finding with a lot of the small caps at the moment is they're rallying 10-15% and then they're collapsing 20%, rallying 5%, down 5%. It's been one of those environments, I think, for the small caps and the micro caps. A lot of individual names are grinding higher, though they are trending, but it's very, very slim pickings. I think it needs to confirm a breakout, and I think there's another 7% upside there. But it is a very messy, choppy uptrend for the Russell 2000, and the micro caps, as you would expect, are closely mirroring the small caps, and I think that's probably where the alpha is. I think with the micro caps, I think if the micro caps can put in a breakout and the small caps put in a breakout, I'd probably lean more towards the micro caps, just purely for the upside potential that they have. So that's those are a couple of charts that I'll be watching with a lot of interest. And obviously seeing what the reaction is to the US election. I think general consensus is a Trump victory would be better for the riskiest assets, and I think that's what the market's kind of been pricing in over the last couple of months. Gold is a big one. Obviously, I get a lot of questions on gold. My chart hasn't changed for gold since it broke out above 2100. The longer term outlook has been 3200 now. Of course, I didn't expect gold to put in a parabolic move, but I think it's probably just a function of what we're seeing with the economy, etc. Like I said at the start, I do see all the economic indicators. I pay attention to a lot of the key metrics, etc. And gold, for me, I'm still working with upside targets up around 3200. I think there probably will be some kind of digestion of gains, maybe not too distant future, but at the moment I think you just have to ride the train higher, and like I said, for me it's a Fibonacci chart, and 3200 will be the level for me. Now, I am about to get into around 20 individual stock ideas. If you're still here, it tells me that you're finding a lot of value from my work, so please do smash the like button. Like I said, it really does help with the YouTube algorithm, especially in the investing niche. It's very, very difficult to kind of get a platform and a voice, so smashing the like button would be very, very much appreciated. But what I want to do is just kind of start off, I think, with Palantir. Now, Palantir's up nearly 150% year to date. It's knocked it out of the park. Now, they have earnings on Monday, so that's something to pay very, very close attention to. Now, I have been covering Palantir for the last 3-4 months on the channel, so I am going to continue to cover it. Just for disclosure, we've met our upside targets in Palantir. Obviously, we know that Alex Karp, if you pay attention, Alex Karp has been selling, dumping his shares recently, which is obviously a cause for concern. But if it breaks out post-earnings, then $45 would be the level for me. And if it does break out above that level, which is previous all-time highs, then there is potential for big upside objectives, provided the breakout can stick the landing. But like I said, we need to see how the market reaction is on Monday to it. Next up, we've got Dell. Now, Dell's up nearly 70% year to date. Obviously, we're pushing up against that $100 billion market cap. I think it's got a pretty reasonable PE ratio, obviously solid 12 months earnings growth. And for me, it's building a pretty textbook looking 3-month cup and handle pattern. I think if there's a confirmed breakout and a follow through above 130, then potentially that could be a level to maybe test the waters, dip your toes. Next up, Nvidia. Now obviously Nvidia's it's been on a rocket ship, up 175% year to date. Big question marks that I get all the time, especially from our clients, about things like valuations, etc. And I get it, but there's no sign of the trend ending at the moment. For me, if it puts in another breakout, I think there's another 22-23% upside to be had. I think 175 would be the next level for me, but of course we need to get through the US elections unscathed with the market. And if it does sell off massively, then as always I'll be building in buy low, sell high opportunities. I think probably that's what my work is starting to become really well known for, is my ability to highlight the buy points on big corrective phases or dips on stocks, etc. And I think Nvidia has met our upside targets, but I'm hoping to see a further breakout and 175 to come into play. Now Apple's getting a big haircut on the back of earnings. So what I wanted to do with this chart, I have been covering it for a few months on the channel, met upside targets a few weeks ago, but I think it makes a lot of sense to just build in support levels. You know, if anybody's out there and telling you that Apple's going to crash and it's going to zero, you know, for me, if stocks like Apple and Nvidia want to drop 20-30%, it's always an opportunity. Don't let anybody else tell you otherwise. Just building technical support levels, they oftentimes hold a lot of merit. And for me, if it does pull back as far as 200, then that would be a point where I think you would probably want to just dive in head first. We've also had Amazon reporting earnings in the last 24 hours. We've had a monster reaction today. I think it's up around 7% at the moment. The levels that we're working with for our best case upside target is around 225. Again, I'm utilising Fibonacci levels. I think the chart shows that the Fibonacci levels have a lot of merit for this particular chart. Something that I like to do is just get into each chart and figure out what is relevant and what isn't relevant. One of the biggest mistakes that I see from a lot of technicians and a lot of the CMTs, etc., is that they try to force their own processes and analysis on a chart instead of taking the time to figure out what is actually applicable. So I think for me, Amazon, very clear, it's a Fibonacci chart, and I think if it breaks out above $200, then maybe that 223, 225 area comes into play as an upside objective to aim for. Next up, we've got Meta. Now Meta up massively, 60% year to date. Again, it's a very reasonable PE ratio. We've got decent earnings growth there as well, and again, it has broken out over the last few weeks to new all-time highs. It is consolidating over the last week. We've obviously had earnings again. The earnings looked okay from where I'm sitting, but I think if we continue to stay above that kind of 543, 540 level, I think you can continue to remain bullish. And again, big upside targets provided the market doesn't fall off a cliff in the next couple of weeks. Next up, Monday.com. Now, Monday.com, tech company, outperforming the market 32% year to date. Now, it has broken out over the last few weeks. It is consolidating and just slowly but surely just grinding higher. Now, previous all-time highs on this one are up around 440. So if it does get a little bit of mojo, we have earnings coming up on November 11th. There is a decent little short interest on it as well, so there are potential catalysts to take it higher. There is solid 12 months earnings growth as well. So it'll be very interesting to see if Monday.com can knock it out of the park with earnings as well. Google, another earnings reaction this week, massively knocked it out the park, I think, would be the initial reaction. Over the last couple of trading sessions, I think with the broader market, we've had a little bit of a pullback. But for me, it's pulled back to a very, very logical level. And again, I see no reason to remove my upside targets here around 192. Just for disclosure, it's been a buy for us around 150. But the trend looks to still be intact, and hopefully the level here will just continue to move higher. I'm still remaining bullish on Google. Netflix as well, no problems with the chart whatsoever. I covered this chart last month, and provided we're above that $700 level, I think $1,000 is very much in play. I think the big issue would be, and I think this probably goes with every chart, I think if you start to kind of get into the realms of failed breakouts, especially in mega cap tech, etc., if these breakouts all fail at once, that's probably in an environment where the market isn't too happy with what's going on in the US. But for me at the moment, as long as you're above 700, I think there's logical upside targets there up around 1,000. Tesla. Now, my chart hasn't changed for Tesla at all. I think Tesla, massively positive earnings reaction initially. Now, to kick off this week, we've obviously had a bit of a pullback. The market's telling us that this $270 level is important for this stock. I think if it breaks out above 270, then that's a massively bullish chart pattern that's been developing over the last 15-18 months. So above 270 would be my level there for Tesla. We've got Starbucks. Now, Starbucks, very, very lukewarm performance year to date. It's only up 3%, but it doesn't mean that it can't start to outperform. I think for me, I like the $100 round number levels. I think when you break out above significant milestones, then quite often you can kind of get that momentum to come in. But again, buy low, sell high opportunities, identifying the key levels is very, very important, something our clients appreciate. But the next level for me would be above $100, and I think above that, then there is every chance that Starbucks is taking the next leg higher. Now, Spotify have been absolutely crushing it this year. It's up 105% year to date. They now have a PE ratio as well, and looks like it's potentially trying to break out to new all-time highs. I think this is probably one to consider post-earnings. Obviously, we've got earnings coming up on 12th of November, but above that 387 level, then again, it's bringing in upside Fibonacci targets. I think when you look at the market cap of something like Spotify, I don't know anybody that doesn't have Spotify. So I think above this 487, the market cap does seem quite low in terms of what other the big tech companies are valued at as well. So I think there might be a bit of an undervaluation there, but again, I don't argue with price. If price collapses here, no problem. But for me, above 387 would be the next level. Now, uranium, I get it, isn't for everyone, but this is a longer term monthly chart that I've built out here. Again, it's been one of our buy low, sell high charts, and we are now looking at this from a perspective of what happens if it breaks out to new all-time highs and sticks to landing above that $56 level. We have already met our upside targets on it, but for those of you that are looking for a new opportunity, the uranium charts are starting to kind of look a lot more interesting, and I think if Cameco Corp is breaking out to new all-time highs, you're probably starting to see a little bit of a bid into uranium as a sector as a whole. So that might be a chart to keep an eye on over the next few weeks. Likewise with Goldman Sachs. I've been covering this chart on the channel for quite a while. It's up 35% year to date, the solid 12 months earnings growth, and for me the target hasn't changed. I'm still looking at this 610, 611 level as the next level of interest for me. Now, TerraWolf is a chart that I've been covering on Twitter for a little while now. Lots of questions on it, lots of DMs on it, so I'm just going to add it into the monthly outlook. And I think the message would be there is upside targets here at $9, but you obviously have to understand that when you're dealing with small caps, micro caps, etc., these things are up and down 10-20% regularly. If you are out there and you've hit 70% gain on it, or there's no harm in saying thanks very much and just moving on to something else, just with the risk of next week obviously on the horizon. But for me, I am still working with upside targets here around $9, but I can see as I'm recording this, the market for some reason today isn't really enjoying TerraWolf, but hey, it's had a massive run up, and let's see how that one develops over the coming weeks. Again, another chart that I've been covering on the channel for a while, Royal Caribbean. For me, it's probably met upside targets there over the last week. It's up around nearly 60% year to date already. There is still a little bit of a short interest here, around 4%. So if it can break out above that kind of 217, 220 level, then perhaps it could go on another run. But for me, I think Royal Caribbean is probably met upside targets and potentially look to move on to something else. General Motors, again, I get the question quite a lot from our clients, Tesla, General Motors, etc. I think we just need to have a look at the performance of General Motors this year, which is up nearly 40% year to date. The 12 months earnings growth, etc. I know, there's a lot of folks that compare the Tesla to General Motors. I think I've got it here. Yeah. So, General Motors has been outperforming Tesla this year by 43%, and I know there's a lot of Tesla fanboys out there, fangirls, but actually General Motors has been the better investment in 2024. For me, it has broken out above another key level. I think if this level can stick the landing, if that $50 level can hold as a new floor for price, then logical upside targets there would remain around $64. So Micron Technology, a bit of a nothing burger month, I think, would be the frustration for a lot of Micron Technology holders. For me, this is one of the trade ideas from our chart book, and it just hasn't really got going. I think when you kind of get these failed moves, sometimes they can get an initial spike and then consolidate, and then they start to move higher. But Micron Technology, for whatever reason, just hasn't kind of caught that bid. I noted Intel earnings last night as well, which were very, very reasonable. I think the reaction to that stock was very, very good. When I was looking this morning, I don't know where it is today at the moment, but Micron just hasn't really caught that bid. But I think as long as you're above that kind of 97.50 level, I think you can continue to remain bullish on Micron Technology. It's only up 17% year to date, so it's not been a massive outperformer or anything, but not to say that it can't catch a bid over the next few weeks. Airbnb, very, very flat on the week now. If you pay attention to a lot of FinTwit, they'll convince you housing crash is imminent and Airbnb is going to zero, etc. I don't pay attention to any of it. For me, Airbnb has just been working fine. It's been rebounding from very, very logical levels. The systematic process that we work with trailing stops, etc., it continues to move higher. I think there's a potential another entry there above 142 for anyone who's maybe looking to buy it. I think the earnings will be very, very interesting on that one. And we also have Maple Bear Inc. If you're not familiar with what Maple Bear is, if Instacart obviously IPO'd back in 12 months ago, and it's just been building this massive base ever since. Lo and behold, it has broken out, and for me, earnings on November 12th, will obviously dictate, I think, where a lot of these charts in the near term go. But if you are still here and you are wondering who it is I am and what it is I do, please do jump on to our website at honeystocks.com. There's a link in the description. I have laid out all of our time-stamped, transparent work. I only use all of my own charts and data, but essentially what we provide are memberships to all of our premium work. Now that includes our premium weekend analysis every weekend with all of our best charts, and also our weekend hot list. We also provide access to all of our highest conviction investment ideas, which I'll show you what that looks like in just a second. You have access to our midweek halftime analysis, access to a wonderful, highly intelligent community of professionals, investors and traders from all over the world. You would have access to all of our chart books as well, which covers all of our most liquid stocks, ETFs and commodities from across the world. And if you are new to technical analysis, I also provide access to our complete technical analysis program, which I'm told is incredibly very well built out and very, very good if you're someone who is looking to maybe learn about systematic process and building out your own investment thesis. But just to quickly show you what our highest conviction investment ideas look like, this is a recent alert that went out for Nvidia. I think I touched on that chart just a few moments ago. Spotify was a massive gainer. Dell has been a good one recently. Southern Copper has been another good one. Rocket Companies was massive. But I'm very, very unique in what I do. I lay out all of our highest conviction investment ideas and the performance of those ideas. I've done this every year over the last 6-7 years. I'm not recommending pump and dumps or penny stocks. It's all high quality stocks with good risk to reward propositions. But I think generally speaking, my work is probably a good fit for you if you have a mid-term approach, if you're someone who just can't make day trading work, if you're looking to just maybe get into more of a systematic trend following based system, maybe you're looking to learn about technical analysis, maybe you're just too busy with work, life, family, etc. to be finding the best stocks. Maybe you're sick of hunting around social media and just want to be part of a community. You might find a home with our work. But please do check out our website and let's see what the market chucks at us next month. But whatever you're up to, have a good one, and thank you very much for watching. Thanks.